Well, it looks like you're all ready. So the people who are not yet here will lose out. Of course, you know the people in the front row, I think everybody gets $100, right?
Yeah.
Yes.
So, missed out on that. At the Starbucks, yeah, absolutely. I'm Joan Schmidt, and really pleased to be the moderator of the session on cyber risk. Appreciative to Andreas Richter for allowing me to have this opportunity and really to suggest that we have this session. He's thinking, here we are in Seattle, in a region where there's so much technology activity going on with many organizations that are the leaders within the technology space, that we should take advantage of that opportunity. So Andreas, we have to thank him for that. And then the three speakers that are here, and I will introduce them. But want to give a little bit of a foundation on this. I think that Andreas did a great job this morning of having this idea of risk and three fantastic presenters to talk about what is risk and leading into certainly a topic then that there certainly are some unknowns and there may be some unknowables with regard to cyber risk as well. And I had thought about giving some context to the topic, but you will see pretty quickly that the speakers have material ready for that context. So instead, I thought I'd put it within the context of ARIA. And before I do that, though, I want to ask all of you to be ready to do some different things. One is that we would like to have interaction along the way. We don't want to have presentation and then questions. There are slides available, but the slides are really just intended to be there in case we're having a little trouble getting you to interact with us. We may ask one another questions as well. We're also going to stay in our seats. We're not going to get up to the podium and present. So the idea here is truly not to be presenting information, but rather to be learning from one another. And so I'm asking all of you to be prepared, have some questions, have some comments along the way, and then we get to do the same. And I do have a question for you, all of you, that I'll start with in a moment. Let me begin. So I went to the ARIA missions and goals statement. Now this is going to change. The board is reviewing what is the mission and the vision for ARIA. But currently, this is the current mission and vision that's on our webpage. And of course, we are in the business of advancing knowledge and risk management and insurance. And that we do this through research and education. And of course, they do align with one another, I hope. And so we had this great intellectual leadership, especially in the morning session from academics, and now intellectual leadership from industry members. And part of that is through our connection with industry, consumers, and policymakers. So a really nice connection here of starting out with predominantly research-oriented, moving into using those ideas for understanding what is happening within the industry and what we are able to contribute within those questions. So I went through to this year's annual meeting, and what are some of the topics? Well, understanding risk, obviously, we just talked about that. Methods to manage, and Neil's comments, I was so appreciative of this idea of having additional capital to try to deal with the unknowables. Understanding the conditions that lead to successful management of risk. Many of you are doing research on insurance companies and what are the conditions of the insurers that might lead them to be more successful or less successful, regulation, investment policy, product design, and so on, and so on, and so on. And so all of this is consistent with what we're talking about. So within cyber risk then, what do you think cyber risk is? And I'd like to ask a few of you to answer that question. What do you think cyber risk is? And there's no right answer. Now, many of you are teachers, right? So, Harris.
It's what got Lloyd's in trouble.
It's what got Lloyd's in trouble, and what do you mean?
They didn't have any clue what it was, and they decided to insure it anyway.
So you're talking at the end of the 80s, early 90s when Lloyd's got into trouble? Anyone else? What is cyber risk?
I think
Bill Rabel, University of Alabama. I think of cyber risk as being the risk of access, inappropriate access to information that's in digital form as opposed to hard copy, and also the potential interdiction of communication that's electronic in nature.
Okay, so access to information, others.
I'm Michel Cajon of the Wharton Business School. Well, everything related to access to the internet, which is almost by definition today everything, whether it's on mobile or any critical infrastructure operation around the world, and our dependence on this fast-moving, ever-changing animal.
People will define this risk differently. We'll talk about what a definition is that's possible. I've been changing my office space, and in the process I found from 2000 a paper that one of my students wrote on the burgeoning area of cyber insurance. Now, 1997, I think, was the year when the first policy was developed that was a standalone policy, so it was a fairly recent paper that was done. Of course, we know that the World Wide Web was in the late 80s, and that's really what introduced the idea of organizations being on the internet. We had the precursor to the internet before that, but it was the World Wide Web that really moved us forward. So it's a fairly recent area, and we do know that insurance certainly has covered some risks that were unknown at the time that the insurance was sold. So it is an important area every day. I'm seeing some evidence of it. The Atlantic Monthly magazine just had an article about possibly the internet being split apart, that countries now are feeling concerned about having it be this open access. And we talked about it this morning, that could make things more concerning or less concerning depending on how it's approached by splitting it up. So we want to talk about what is cyber risk, how important it is, what are the questions associated with it, and importantly, the panelists have decided to take an approach today to try to get at the key questions for us to research. And of course, there are many of you, so many people in this audience who have done research on this. I was reflecting on Jim Garvin at an ARIA meeting a couple decades ago, telling me about this outstanding new opportunity to buy books online. This tiny little company that was developing. And then, of course, just recently, the Shin Paper Award at the International Insurance Society by our colleagues Christian Wiener, Martin Ealing, and Jan Swerf, which is now published in the Geneva Papers, and the panelists have read that and will refer to it. So we have three outstanding panelists, Leslie Lamb, Brent Reith, and Rennie Nuzzi. I'll give you just a little bit of background. And then, as I said, we have slides, but hope to have interaction among the group. So Leslie is the Director of Global Risk Management for Cisco's finance organizations. And she's worked with Cisco for about 13 years. Before that, she had appointments with AIG and Marsh. So she's been in the industry for quite a long while. I guess you were about 5 when you started.
That's it. Mm-hmm.
Absolutely.
You betcha.
And of course, Cisco is a great organization for us to use as an example because Leslie has both the services that Cisco sells to others that are technology driven, and then Cisco itself has its own exposures from its own use of technology. So you've got, as a risk manager, both of those dimensions. And Leslie's intention here is to give us more of the foundation of how organizations are thinking about risk management for cyber risks. What are some of the issues that are encountered and some of the ways to manage that? Brent Reith is with Aon, and he's in their financial professional services area. Brent's been with Aon Risk Services since 2006. He is an Indiana University alum. Leslie, by the way, has her degrees from Northern Arizona University in English. I always love it when people are in risk management from.
Not finance.
And bachelor's, that was her master's and bachelor's degree from University of Pacific. And Brent from Indiana University has a finance degree, and he works in Aon's professional risk solutions and is one of the leaders within that area. And Brent's going to give us some of the insurance and modeling assessment of risk area. And Rennie is going to offer us some aspects of trends and future directions, a little bit more of the research. Rennie Musi is with Endurance. He joined them in February. He is the Senior Vice President with Endurance, and he is responsible for their professional lines initiatives in the Western region. Previously had also been with Marsh, with Aon for about 20 years. And so the way that we've had to design this, with Rennie having had this long experience within the financial services, technology, professional liability area, has generated quite a few ideas of questions that we might be considering. So now remember that we'd like to have interaction along the way, and I'll let Leslie begin.
Thank you. Thank you, Joan. We're certainly pleased to be here this morning, and we appreciate the opportunity. I think we've been working together on our presentation for quite some time now, so it'll be interesting. It's also interesting for us to learn from you, and this is what makes it so exciting for us to get into this. I am going to use cards because I want to make sure that I get all my points out there and I won't remember them. I am setting a foundation here. I think some of the meat of what you're going to want is in some of the research, but I have some questions along the way as well. So with that, we'll get started. Oh, these are billed, apparently. So certainly, if we take a look over the last 15 years, we have seen amazing change with the internet, particularly, and with technology. I've been with Cisco now for the 13 or 14 years. I think it's more like 14 years, but whatever. I started when I was 5, as she said, yes. But you know, it's been an interesting transition to see all of the things. While this number of 99% of the world is still not connected, probably is a little debatable, I think we can all agree that there is a lot of the world that is not connected, a lot of things not connected, and I think we're going to see some amazing change over the next couple of years, especially as we see the Internet of Everything, which is a tagline I'm sure you've all heard. It's going to be creating opportunities for countries, for businesses, for individuals, for all of us. I think it's going to create a lot of risk as well. So that's what we're here to talk about today. Oh dear, I don't like Bill's slides. Sorry, I didn't realize these were all Bill. We're now connected in more ways through many different devices, and we're in a very rapidly changing world. Currently, the process, it's more about the process and connecting things and people in the right way to the right thing, and that's a little bit about what Cisco does. But as we evolve, as this risk evolves, or as this world evolves, it's going to be about the data and how the data changes and how it evolves and how we are going to start using that data. The raw data is going to become more useful information. We're going to use it in different ways, in a much higher level way. Again, creating more opportunity, but perhaps, and better decision making for sure, but maybe still a lot of risk out there. And with all of that, there are challenges. What we need to make sure is that we're building a networking infrastructure that we can all, it's a platform that we can all build upon, storage, the data that we're going to be building upon, we're going to need areas for storage. That is all going to create a whole opportunity for a lot of different companies and businesses and individuals. We're going to need the networking intelligence to make sure that we're connecting things and all of these disparate systems together. So if you think, I mean, just as a simple example, you know, many of us are now being able to connect our devices, our refrigerators. We can talk to our refrigerators and tell them what we need. Pretty soon, they're going to be on their own, talking to the stores and having them deliver food to your refrigerators. It's going to be a whole new world. And more importantly, again, we need the secure infrastructure so that we can offer better user experience out there, and we can have a better world and not have that cyber risk. But let's talk a little bit more specifically about the cyber risk by the numbers. And many of you know this, but we'll go through some of these numbers. I just want them to be sort of as a foundation, as food for thought as we get into our other presentations this morning. So this is a definition. I think it's important to define risk. I'm not married to this definition by any stretch of the imagination. I'm not sure it's even a good one. I'm going to read it, but I wanted to put it out there because for one point, and I'll get to it in a second, but let me read it. Cyber risk is not one specific risk. It is a group of risks, which differ in technology, attack vectors, means, etc. We address these risks as a group largely due to two similar characteristics. A, they all have potential great impact, and B, they were all once considered improbable. That's the part that kind of caught me, is that as we sort of move into this area of new risk trends, looking at emerging risks, 10 years ago, how many of us thought we were going to be sitting here talking only about cyber risk? I don't think I could have predicted that.
I did.
You did. Rennie did. I knew Rennie back then, and I know he was thinking about it. But today, we're sitting here in 2014. What is that risk, Rennie? What's that risk in 2024?
That's a great question, because one of the limitations I think that happen when we talk about cyber is everybody gets caught up with the internet and the World Wide Web and all that and forget a doctor's office with paper files, including medical records, is an information risk. You know, so that's not what we thought about in actually 1996. When the first policy was written, I was part of the team at AIG that developed that back then. And at that point, all we thought about was viruses, frankly, is that what was it going to do to damage and basically repair systems like you would a property insurance policy, never foreseeing, you know, the 2003 law in California with notification and the development. So you're right.
Mm-hmm.
I mean, as much as I figured we'd be talking about, I don't know what we'll be talking about.
Yeah.
I'd make a lot more money if I did.
Yes, you would. So wouldn't we all be?
Yeah.
Well, I think we've learned, just to add to that, I think what we've found over the last 5 years, and certainly since December 15th of 2013, is the improbable risk that we all didn't think could happen, which was the large catastrophic data breach with a retailer where consumers were impacted. Now that we've seen that, we've had some great discussion around the aggregation of this risk.
Mm-hmm.
And so we've talked about the use of cloud infrastructures and data aggregation, and is 110 million records really that big when we can think about 10 years from now how much information is being collected on one individual?
Mm-hmm.
What are your eating habits? How sensitive is that information? And so there is a lot of unknown, and I think, quite honestly, as somebody that works with companies to try and quantify what this risk is, and I think I'm probably speaking early for Rennie to a certain degree, one of the challenges that we face collectively up here is we can't necessarily quantify what that risk is today, let alone what we think it's going to be 10 years from now. And so it is challenging.
Absolutely.
And you brought up a topic that the three of you know I'm interested in, which is this aggregation issue. Are people within the industry and then governments thinking about this aggregation issue, systemic risk?
Yeah, before I left Marsh and joined Endurance, where I'm at now, I was working in the consulting field in risk assessment and modeling. And we focused a lot of time and attention on trying to figure out, in a massive event, the damage that could happen. If you think about it from an earthquake scenario, it's a lot easier actually to do that. As an insurance company, you can say, I insure this many properties within this radius, so that's my maximum aggregate loss. But what if I provided business interruption insurance from a cyber perspective for every one of a large cloud provider's customers that could result in the virtual earthquake throughout the entire world? And so it leads to something we'll talk a little about later that I like to call the paradox, or the cloud paradox, because of that. But I think there's been a lot of good work done. The paper that we were referring to earlier talks about the Ponemon Institute study, which is a good one. And then there are some others, and the consensus starts to get to, you can get at least a feel for what the hard costs are. What's really difficult is what's the reputational risk and what's the loss of revenue associated therewith. And that's where I think we've made some strides, but we're far off from really being able to ring fence it.
Yeah, I would agree, and I would echo most of the comments that Rennie shared. I would add to that, you know, we still haven't quite figured out, we've seen the catastrophic event with one company, but we haven't seen the Katrina issue in the cyber world. And so In addition to kind of monitoring aggregation of risk from a vendor perspective, as we think about companies that provide systems or different data hosting infrastructures for different companies. In addition to that, we're spending a lot of time working with utility companies, quite honestly, to think through what would be the true impact from a bodily injury property damage perspective if something like that were to happen, if there were a terrorist attack from a cyber perspective or an act of war, God forbid, where cyber terrorism is used as a mechanism to create economic loss for a region or a country.
Mhm. But we all face that because we're all, using different devices and storing things in different places, and we have no control. We have 70,000 employees and as many contractors at Cisco. We could all potentially be storing things in different places, and there's no control over that. So it's just huge, the potential there. So just getting into the numbers just a little bit. I think we talked a little bit about the Ponemon Institute and some of the average cost, the hard cost of what a data breach would be. So we all know it's about the $201 per record, but it's really about the sales drop, the potential sales drop if something happens, and that reputational effect, and that many consumers don't continue, or do they? Are we becoming desensitized? And Rennie's going to be talking about that a little bit later to this, because there have been so many that have happened.
Well, maybe show of hands, post-Target, how many people shopped at Target? Or did anybody change their, we had this discussion at breakfast.
I didn't.
It's challenging because I think from a consumer perspective, and there's an ongoing debate, and I think underwriters would love to see chip-activated credit cards utilized the way that we see it in the EU. In the US, I think consumers like ease of use. We like to have the transaction be a simple process, and therefore we haven't necessarily embraced all that from a business perspective. There's obviously additional expenses, but it was interesting. We were split at the table, I think, of number of consumers that refused to go shop because of concerns around security.
Well, our empirical data suggests about 33%.
Right.
Well, one of the things that with the Ponemon Institute study, if you look at real hard cost, it's actually on a record basis. There's a study out there from a company called Net Diligence, and they did specifically that which is related to actual insurance paid losses. So there's less theory in it and more hard cost, because in my opinion, one of the challenges to the Ponemon study is the fact that a very large chunk of that $201 record is soft costs, which is the estimated loss of customers, the estimated loss to reputation, which is really, really hard to quantify, as opposed to the easy things. It costs you 99 cents a person to tell them what happened, and provided credit monitoring services and the like. But one of the things that's consistent in the research paper, the Ponemon study, and even Net Diligence is the more work that's done up front, which Leslie's about to talk about, significantly impacts the results. That's an area that I'd like to see more focus and study, because one of the findings between the paper and consistent with Ponemon is if a company employed a chief information security officer, the losses was significantly reduced. And Joan and I were talking earlier that is that a convenient result because maybe the company was a better in dealing with risk, and that's why they hired a chief information security officer. But it was pretty clear in both instances that it was highly relevant. But what is definitely true is the preparation and the assessment helps the result.
And this is something that you can do for us. Is one of the reasons why we don't have as much research is the availability of data. And your organizations likely have some data that if we can make them anonymous, that we can use to try to help answer some of these questions. And I'm wondering if maybe we need more information from the panelists, but is the work that we're doing in other catastrophic areas, earthquake was mentioned, is that something that you think also fits for what we know about cyber risk? Or is cyber different? And do we need to be researching it in a different way? And I really think from a societal standpoint, because there's a lot of security from a governmental perspective, not just from the business perspective. Any thoughts on that? Do you have a sense of whether or not the work we're doing in current catastrophe area is appropriate?
It's like only the first row speaking here.
Yes.
I want my $100 in Starbucks. No, I think there are parallels. Of course, and many other people have done some work in catastrophic risk. The aggregation is a big issue. The reputation is a big issue. The fact that maybe after the different type of attack you have, if you're talking about attack, people will go back, some lawyers will go back, some judge will go back to see whether you actually have done some preparedness before the disasters. So no, I think there are parallels. I think the challenge we have in the research community is that earthquakes have been there forever, hurricanes as well. So we have, maybe we don't have 10,000 years of data, but we have more data. What you guys are struggling with every day is what's going to happen tomorrow. And I think that's a challenge for the research community, which typically, not always, but typically is a little bit slower than the path in the private sector. So I don't know. I mean, one question I would have for you, Leslie, at Cisco is, what are the 2 or 3 questions, maybe that's for the panel, what are the 2 or 3 questions that are being discussed on the board of directors discussion at Cisco in terms of your insurance strategy? I mean, to me, that's a very legitimate question for you. You know the technology very well. You work with many insurance companies. What's your